Welcome to the EXP Group, one of the leading providers of business training solutions. Please enjoy this presentation and visit us on the web at www.theexpgroup.com for more information.
Hello and welcome to today's EXP training video for ACCA paper P3 Business Analysis. We're on page 24 of our Express Notes, and those of you that watched yesterday will remember that we did the Boston Consulting Group Matrix, BCG Group Matrix, and we used this matrix which in effect told us what we should do with various different sort of items or products or SBUs within our division. And the aim would be that any cash generated from the cash cow would go to the question mark with the aim of moving the question mark to become a star, and we would also be supporting the star with the aim of the star becoming a cash cow. And this was a model enabling us to look at items within a portfolio. Now, if you look at the next page, page 25 of the Express Notes, you'll see another matrix which is similar in a way to the Boston Consulting Group. This time it's called the General Electric Matrix. And on the same principle that the Boston Consulting Group, the matrix looks at the attractiveness of the industry as well as the strength. And in effect, the strength here is classified as business position. So, looking at the notes, an organisation's SBUs, strategic business units, are entered into the matrix based on industry attractiveness and business strength. So it's that attractiveness and strength matrix again. And the appropriate action for each segment is shown in the table below. First of all, before we look at the table, just looking at the text below the table, it helps us think about what do we mean by business strength and what do we mean by attractiveness. First of all, the strength of the SBU, the strength of the business, will be determined by a variety of factors. How good it is, in effect. Okay, what's its financial position? How much cash does it have? Is it profitable? What are its competencies? Not just the threshold competencies we looked at earlier, but the core competencies. What are the core competencies? What about relationships? Here we've got supplier relationships, but also customer and client relationships. So the strength will be determined by a variety of those factors. The industry attractiveness will depend on, again, a number of factors. So, for example, competitors within the industry. We can use Porter's 5 forces to determine industry attractiveness. What about the growth rate? How attractive is it according to the growth rate? So let's go back to the diagram now. What we're looking at here, we're saying we've got how attractive is the industry, and it grades it as low, medium and high. And how strong are we? What's the business position? What's the business strength? Again, from low, medium and high. Now, the matrix here in our Express Notes is nicely colour-coded. And the green ones, if we look at the green ones first, well, here we're in a high strength position in a very high attractive industry. So yes, we need to invest in that SBU. We need to try to grow it. Similarly, it's a medium attractive industry, but we're in a strong position. Let's invest in it. Let's grow it. Here, we're in a high attractive industry in a medium strength position. So what we're saying is the areas in the top right-hand corner, that's where we should invest. That is where the SBUs are that we should invest in. If you look at the other extreme, the red, well, it kind of goes in the opposite direction. Okay, It's not a very good industry to be in. It's low attractiveness. We're not in a very strong position. We should not be investing money in that. So harvesting or divest. We shouldn't be pushing more money into that. The same if it's a low attractive industry and we're not in a strong position, harvest or divest. We're in a low position, in a medium attractive, harvest or divest. So here, any SBUs within these three areas, let's get out of them. Let's harvest or divest them. The remaining ones, we need to review almost on a case-by-case basis. So here we have selective investments. So we have to analyse and think of those on a case-by-case because it is not clear-cut. Okay, that's the General Electric Matrix, the GE Matrix, which is another portfolio management model similar in a way to the Boston Consulting Group. Okay, thank you for listening to today's video. Please come back tomorrow and we will be looking at another theory by Michael Porter.